Hi, I'm Miles from Swan Investing, the home of making 100% returns on your investment while sleeping well at night. Yeah, I've been involved with the financial markets and investing since the late 90s. Everything I teach is earned or learned through experience, and I've made plenty of mistakes in the past, which is great for you because you can learn from these without taking the losses that I did. I see today a lot of people losing money on stocks, and given the whole COVID situation, I've decided to publish a weekly video on this channel to share my investing experiences and strategies. So this is the first video, and it'll cover two strategies. Firstly, what I call the Never Never Land strategy, and why I fired my financial advisor in 2009. And secondly, my Swan 100% return strategy, and how I learned to make 100% return on stocks and become financially free in just 6 years. So first up, the Never Never Land strategy. So the Oxford Language's definition of Never Never Land is an imaginary utopian place or situation, a never never land of unreal prices. And it's because you never get there, this is the label I've given the strategy that I see 9 out of 10 mainstream financial advisors recommending. So in 2004, I had 2 young kids, a new job, and no time. So I decided to put my investments in the hands of such a mainstream advisor at one of the largest wealth management firms in the city, which I won't name, but you can probably work it out which it is. So they got me into some S&P 500 and global equity funds and painted a picture of a fairy tale ending if I worked and saved hard. So, feeling in good hands, I got on with life, and then the 2008 crash hit. And so here's the performance numbers after 7 years. So these are the annualized returns from 2004 to 2010. The S&P averaged 3.8%. Now my funds were only about 60% S&P 500 stocks, so the correct benchmark was actually the Morgan Stanley Capital International Index, or MSCI Index, which also includes the biggest companies in several international stock exchanges such as the UK. Now this averaged 4.5%. Now my Never Never Land wealth manager funds were a crappy annualized 2%. And this was in the period when inflation was 2.5%. So if I adjust for inflation, my 7-year return was a big fat 0. I checked out whether this was just a blip or whether underperformance was common in managed funds recommended by mainstream financial advisors. I don't have the actual data from back then, but the picture hasn't changed today. The conclusion blew my mind then, and it still does. The vast majority don't justify their fees. So this slide is for US stock funds, and over 85% of fund managers underperform their relevant benchmark when averaged over 10 years. That's 91.6% for over 15 years. I also looked into the fairy tale ending. I'm going to show you this on my numbers at the time. Now numbers don't lie, so I'm going to head to the calculatorsite.com and jump on their compound interest calculator and show you how many years it would have taken me to get to financial freedom with the Never Never Land strategy. My goals have changed since then, but at the time my goal was to get to £40,000 and tax-free with an average £10,000 per year investment. So I'm going to start off with an initial balance of 0. For the interest rate, I'm going to use the actual annualized return of the managed funds I had been in since 2004, i.e. the last 15 years. And that average is 5% after their fees. And I'm going to make the assumption that this is reasonable for the future. So, we're going to run this out for 40 years. Compound interest interval is yearly. Now the monthly investment, so £10,000 per year, is £833 per month. And so let's run that out. So here we have the £10,000 per year investment, and this is the interest at 5%, and here is the savings pot build up. And so, to get to my £40,000 per year tax-free, I need to come down to year 35. Now this assumes 0 inflation, but we know that's wrong. And with only a 2.5% inflation, £40,000 would need to double every 30 years. In other words, I would run out of money if I started drawing down at 35 years. So there's an industry rule of thumb on these calcs to avoid running out of money, and it applies for single-digit rates of return and low inflation, which is appropriate here. So, and the rule of thumb is you need a savings pot of 25 times your financial freedom goal. So in this case, it would be 25 times the 40,000, which is 1 million. So in fact, I'd need to save a little bit longer, which is out to 38 years before the savings pot is 1 million. And that assumes then a low inflation, 2.5%. Now the average in the UK is actually 4%, so it could be longer. But let's say it's going to take about 40 years. Now I don't know about you, but that's the same as never in my book. So I fired my financial advisor, and I think any sane investor would have done the same in my position. So here's why, in summary. Firstly, a big fat zero after 7 years. Meanwhile, they took a 1.7% fee every year. Thirdly, 40 years of working and saving to get to financial freedom, and that's if inflation stays low, is never, never land. And although not advertised on the tin, they actually had no authority to give investment advice or be proactive. They could not say, Miles, we think you can make more money if you do X or Y, or better still, just do it for me. They couldn't do that. They were really hired as product salespeople. So I decided I'll be better off moving everything to an index tracker fund, which is what I did for a little while. And I'll cover that strategy in a future video. Now, I'm not saying never use managed funds, but if this strategy suits you, then pick the ones that are in the 10% that consistently outperform the relevant benchmarks. So what then really followed was I went on a journey to find a much better way. What I wanted was a return of 35% after tax on my investments to compress time from 40 years to 10 years or less. And it was in my search for this that I had a series of aha moments that culminated in an epiphany 10 years ago when I discovered a system that consistently makes 100% returns on stocks. And this is where everyone says to me, come on, Miles, how on earth can you do that? And I know a lot of you, if not all of you, will be saying the same thing and thinking this is a load of hyperbole or some scam, right? And in your shoes, I would probably be thinking the same thing. So hear me out. My first aha moment was when I learned that every year hundreds of stocks on the US NASDAQ, London Stock Exchange and Toronto TSX make over 100% return in 12 months. So this is an example from last year which shows there are over 500 stocks that made over 100% return. So I geeked out on this and I reviewed press releases prior to the rises and tried to get to the bottom of it. And the second aha moment was when I noticed that some stocks went up by 100% before any major news events. And it's surprisingly simple why. So humans have evolved to follow the crowd, and they will pay more due to the fear of missing out. So when the prize is very big, there will always be a rush of interested buyers, and stocks are no different. And as the big news gets close, the price can double or even more in anticipation. So here's another example of the fear of missing out, or FOMO. At the end of the California gold rush in 1849, prospectors would pay 40x what prospectors paid at the beginning. And to today's money, they were paying $1,000 for a shovel. I mean, crazy, crazy. But it was still small compared to the potential prize of finding gold. So the secret number one of my Swan 100% strategy, which I'm going to reveal to you here, is stocks with an eye-popping success case that would 10x the value of the company will go up by 100% before major news with a near certainty. Now the screening criteria are obviously a lot more involved than that, and I'll reveal all the secrets in the future, so stay tuned to this channel. But let's look at the numbers first on thecalculator.com. Okay, so we start off with 0 again. Now, interest rate. So on average, the Swan system makes 100% return per stock in about 6 months. But for practical reasons, I'll explain in a future video, we can't be invested 100% of the time. So for financial planning purposes, let's assume 50%. We'll also round the 6 months up to a year. So we plan conservatively on 100% return on 50% of our capital, or put another way, a return of 50% on all of our capital. So we're going to put 50% in here. And we'll run this out. And again, we'll use the same £833 a month we had before. So again, you've got the yearly deposit of £10,000 a year, you've got the interest rate at 50% on that total. Again, we're assuming only half of it is invested and it's making 100, so overall on the £10,000 we're making 50% return, and this is then the build up in the savings. So the result is that within 6 years we're then able to make the £40,000 per year from tax-free trading accounts that took me 40 years with a Never Never Land strategy. And as the rate of return is high, we also don't need to worry about inflation. So this has given me financial freedom, and through Swan Investing, I've been coaching others on it for some years now. The system is simple in that it's intuitive and anyone can follow, but it does need some effort, although it need not take more than a few hours a month. And because of this and the near certainty in results, there's no stress and you sleep well at night. Yeah. So if you're interested to learn all my secrets, subscribe below. And if you like what I'm doing to try and be of service to investors who want more from their money and sooner, please hit like. Please also comment or add questions in the bottom and I'll answer them with 48 hours. There are also some links below where you can find out what else I've got going on.